you could expand this conversation even if you had a concentrated position in your portfolio due to growth. If it's something like Apple or Microsoft that has experienced a lot of exponential growth over time and you have a large weighting in your portfolio to that. So keep that in mind as you're listening to this. I mean, imagine having a significant portion of your wealth tied to one particular stock and never thinking about it. Believe it or not, it's actually common, particularly for people who have stock-based compensation. So equity compensation, it can be a powerful tool in helping you build wealth. We tend to see 3 common mistakes when it comes to people who are building wealth through stock-based compensation. So number 1, not understanding tax ramifications. Number 2, going it alone. And by that, I mean not having the right team in place to give you advice and support. And number 3, a mindset that causes people to take on too much risk. So we're actually going to narrow in on that 3rd mistake today, because the thing about concentrated stock is you're probably feeling really good when the stock is going up. But I want you to do a gut check. How would you feel if that stock was going down 10%, 20% or more, and that was money that you were counting on for a house down payment, paying for college, maybe retiring in a few years? So I want to unpack that mindset that you may be taking on too much risk. And Emily, I want to start with that. So what are some of the common risk mentalities that executives who own company stock have?
I think a big one to start with is just overconfidence and identity bias. So a lot of executives equate the company's success with their own and the hard work that they're putting into delivering value. And that can definitely create some blind spots in assessing risk. So people who give so much of their time and energy to building value in these great companies, they have a lot of confidence in their share price rising. And over time, it's likely that it will rise, but no company is immune to shocks in the market. And I think we're seeing a lot of that systemic risk right now in what we're seeing with market volatility. So that's a big one, and that's a really personal one, and it's hard to, it's hard to be mindful of, but it's an important one. I think another is just fear of missing out. That's a very human emotion.
FOMO.
Yeah. So nobody wants to think that they left something on the table.
Right.
So this fear of missing out on growth potential leads a lot of executives to hold on to their stock for too long in the hopes of getting even more upside, even when the stock is already overweight in their portfolio. So, think about what would make you lose more sleep at night. Missing out on a 10% gain in your company's stock because you sold some while still locking in a healthy gain, or losing 20% or more in value because you just held on too long. I think another thing when it comes to this fear of missing out, it's important to keep in mind, just because you're selling your company's stock, that doesn't mean that you won't have opportunities to grow the proceeds or to continue to enjoy things like dividend income if you're working for one of those great blue chip companies that pay a high dividend.